Imagine this for a moment. It's the first week of the month. You wake up early, pour yourself a cup of coffee, and sit down at the kitchen table. You open your banking app expecting to see your Social Security deposit just like every month before. But the deposit is not there. You refresh the screen, you check again. Nothing. Your heart starts beating a little faster. You think, maybe the bank made a mistake. Maybe it's just delayed. So you call the bank and they tell you, "Ma'am, no deposit was sent this month." Then you call Social Security, and after waiting on hold for 45 minutes, a representative tells you something that makes your stomach drop. Your benefits have been withheld because you earned too much last year. You sit there in silence. You did everything right. You worked hard. You played by the rules. And now the government is holding back the money you depend on to pay your rent, your medications, your groceries. If this scenario scares you, you are not alone. And today, I am going to make sure this never happens to you. Hello, my name is June. I am a Senior Policy Analyst, and I help retirees just like you understand the complicated rules that control your Social Security, your pension, and your retirement security. Today, we are going to talk about a rule that catches thousands of seniors off guard every single year. It is called the Social Security Earnings Limit, and in 2026, the magic number is $65,160. Earn just $1 more than that, and the Social Security Administration will take $1 from your benefits for every $3 you earn over the line. I am going to explain exactly what this rule says, who it applies to, and the 3 steps you must take right now to protect your monthly checks. And please, stay with me until the end. Because there is one hidden mistake, a small mistake, that even careful, smart seniors are making in 2026. It can cost you thousands of dollars in withheld benefits, and almost nobody is talking about it. So pour yourself another cup of coffee, sit back, and let me walk you through this slowly and carefully. Let me start by telling you about Robert. Robert is 66 years old. He lives in a small town in Ohio with his wife, Margaret. Robert worked as a project manager at a manufacturing company for almost 40 years. Last year, he decided it was time to slow down. He filed for Social Security at 66, even though his full retirement age, what the government calls FRA, was 66 and 10 months. Robert was careful. He read articles. He watched videos. He even called the Social Security office to ask questions. But Robert loved working. So when his old company called him back as a part-time consultant, paying him a generous salary, he said yes. He figured, I'm almost at full retirement age. I heard the limit is over $65,000. I'm fine. Robert earned about $72,000 in wages from January through October of that year. He reached his full retirement age in November. Then, one morning in February of the next year, Robert opened his mailbox and found a letter from the Social Security Administration. The letter said his benefits would be withheld for the next several months to recover an overpayment of more than $2,000. Robert was confused, angry, worried. He thought he was under the higher limit. He thought he was safe. But Robert had made a small mistake, a mistake I see seniors make every single week. And by the time he understood what happened, his checks were already being withheld, and his wife Margaret was scared they would not be able to pay their property taxes. I am going to tell you exactly what Robert did wrong and how you can avoid the same trap. But first, let me explain the rule itself in plain English. Here is what the Social Security Administration actually says. In 2026, there are 2 different earnings limits. 2, not 1. And this is where most of the confusion begins. The first limit is called the lower exempt amount. This applies to you if you are receiving Social Security benefits and you will be under your full retirement age for the entire year of 2026. For these seniors, the limit is $24,480 per year. That breaks down to $2,040 per month. If you earn more than that, the Social Security Administration will withhold $1 in benefits for every $2 you earn above the limit. The second limit is called the higher exempt amount. This is the famous $65,160 figure, but listen to me very carefully. This higher limit applies only in the calendar year that you actually reach your full retirement age. Not before, not after, only in that specific year. And in that year, the Social Security Administration withholds $1 in benefits for every $3 you earn above the limit. But, and this is important, They only count the money you earn in the months before you turn your full retirement age. So let me say that again, simply. If you reach full retirement age in 2026, your earnings limit is $65,160, and only your earnings before your birthday month count. If you will not reach full retirement age until 2027 or later, your limit is much lower, only $24,480. This is the first major trap. Many seniors hear about the $65,000 number on the news and assume it applies to them. It does not. If you are 63, 64, or 65 years old and not yet near full retirement age, your real limit is closer to $24,000. And going over that lower limit triggers a much harsher penalty, $1 withheld for every $2 over instead of $1 for every 3. Now, what counts as earnings? This is critical, so please listen closely. The Social Security Administration only counts money you earn from work. That means wages from a job where you receive a W-2, or net profit from self-employment if you run a small business. They also include bonuses, commissions, and vacation pay. But here's the good news. The Social Security Administration does not count many other types of income. They do not count your pension. They do not count annuity payments. They do not count interest from your savings account. They do not count dividends or capital gains from your investments. They do not count withdrawals from your IRA or your 401k. They do not count veterans' benefits. They do not count rental income from a property you own. And they do not count other government or military retirement benefits. So if you are worried that taking money out of your retirement account might push you over the limit, please relax. It will not. Only earned income from work counts. Now, here is something that gives many seniors peace of mind. Once you reach the month of your full retirement age, the earnings limit completely disappears. From that month forward, you can earn $100,000, $500,000, $1 million. It does not matter. Your Social Security benefits will not be reduced by 1 penny. The earnings limit only applies before you reach full retirement age. So your full retirement age depends on the year you were born. If you were born in 1959, your full retirement age is 66 and 10 months. If you were born in 1960 or later, your full retirement age is 67. Now let me come back to Robert. Robert thought he was protected by the $65,000 limit because he was reaching full retirement age that year, and he was partly right. The higher limit did apply to him, but here was Robert's mistake. Robert earned $72,000 from January through October before the month he reached full retirement age. The limit was $65,160. Robert was over by almost $7,000. And under the rule, the Social Security Administration withheld $1 for every $3 he earned over the limit. That came to more than $2,000 in withheld benefits. Robert had also told the Social Security Administration at the start of the year that he expected to earn less. He never updated his estimate when his consulting work picked up. So the Social Security Administration kept paying him the full amount and then sent the overpayment letter the following year demanding the money back. This is the small mistake I want you to remember. Failing to update your earnings estimate with the Social Security Administration is one of the most common and most costly errors seniors make, and we are going to fix that today. Let me walk you through the most common traps so you can avoid every single one of them. The first trap is confusing the two limits. You must know which limit applies to you. If you will reach full retirement age sometime in 2026, the higher limit of $65,160 applies. If you will not reach full retirement age until later, your limit is the lower one, $24,480. Mixing these up is the #1 reason seniors get surprised by withheld benefits. The second trap is believing that withheld benefits are gone forever. They are not. I want you to hear this clearly. The Social Security Administration says it directly on their official website. Any benefits withheld because of the earnings test are not lost. When you reach your full retirement age, the Social Security Administration will recalculate your benefit. They will give you credit for every month they withheld a check, and your monthly benefit will be permanently increased for the rest of your life. So if you love your job and you want to keep working, please do not stop just because of this rule. Working may reduce your benefits temporarily, but you get that money back over time through a higher monthly check. The third trap is counting the wrong types of income. I cannot stress this enough. Your pension does not count. Your IRA withdrawal does not count. Your investment dividends do not count. Your Social Security check itself does not count. Only wages from work and net self-employment profit count toward this limit. The fourth trap is misunderstanding the timing of self-employment income. If you work for an employer, your wages count when you earn them, not when they are paid. So a January paycheck for December work counts as December income. But if you are self-employed, your income counts when you receive it, not when you do the work. This timing difference catches a lot of small business owners and consultants by surprise. The fifth trap is missing the special first-year monthly rule. This is one of the most powerful protections in the entire Social Security system, and most seniors have never heard of it. Here is how it works. If you retire in the middle of the year and you have already earned more than the annual limit before you started taking benefits, the Social Security Administration has a special rule that lets you receive a full benefit check for any whole month in which you are considered retired. For someone reaching full retirement age in 2026, retired means earning $5,430 or less in that month. So even if you made $80,000 from January to August, if you stop working in September and earn nothing for the rest of the year, you get a full Social Security check for September, October, November, and December. This special rule can only be used in one calendar year, usually the first year you start collecting benefits, but it can save you thousands of dollars. The sixth trap, and this is the one that hurt Robert, is forgetting to report changes in your earnings. The Social Security Administration calculates your withholding based on what you told them you would earn. If your income changes, if you take a new job, get a raise, or pick up consulting work, you must call them and update your estimate. If you do not, you will either be overpaid and have to give the money back later, or underpaid and have benefits withheld unnecessarily. Now let me tell you about the protections you have, because the law does protect you if you know your rights. The first protection is the benefit recomputation right. The Social Security Administration must increase your monthly benefit when you reach full retirement age to credit you back for any months that were withheld due to excess earnings. This is automatic. You do not have to fill out a form. You do not have to ask. It is your legal right. The second protection is the special monthly earnings test, which I just explained. This is your safety net for the first year of retirement. The third protection is the annual earnings recalculation. Every year, the Social Security Administration reviews the records of every working beneficiary. If your most recent year of earnings is one of the highest 35 years of your career, they will recalculate your benefit and pay you the increase, retroactive to January of the previous year. So working in retirement can actually raise your monthly check. The fourth protection is your right to update your earnings estimate. You can call the Social Security Administration at 1-800-772-1213, or you can visit your local Social Security office. You cannot make this change online. You must speak with a person. The fifth protection is the Self-Employment Substantial Services Rule. If you are self-employed and you work less than 15 hours per month, the Social Security Administration considers you retired no matter how much money you earn that month. If you work between 15 and 45 hours per month in a skilled or managerial role, you may not qualify as retired. But if your work is light, the 15-hour rule protects you. The sixth protection, and this one is huge, is the exclusion of non-wage income. Your pension, your IRA, your annuity, your investments, none of it counts. So you can have a comfortable retirement income from these sources without ever worrying about the earnings limit. Now let me tell you what happens if you ignore this rule, because the consequences are real and they hurt. First, the Social Security Administration does not tax the excess. They withhold it. That means they hold back entire monthly checks, one after another, until the deduction is satisfied. They do not trim a little off each check. They suspend the whole check. So if you owe $2,400 in withholding and your monthly benefit is $1,200, you will get $0 for 2 full months in a row. That can be devastating if you depend on Social Security to pay your rent or your mortgage. Second, you may receive an overpayment demand letter, just like Robert. If the Social Security Administration learns later from the IRS that you underreported your earnings, they will send a letter demanding repayment. They can demand a lump sum, or they can automatically take the money out of your future benefit checks. Third, your spouse and dependents who collect benefits on your record can also have their benefits reduced because of your earnings. So this rule does not just affect you, it affects your family. Fourth, Your Medicare Part B premium is usually deducted automatically from your Social Security check. If your check is withheld, Medicare may send you a separate bill. You must pay that bill, or you risk losing your Medicare coverage. This is a chain reaction that catches many seniors by surprise. Fifth, even though you are working and receiving Social Security, you must still pay FICA taxes, Social Security and Medicare payroll taxes, on every dollar you earn. There is no senior exemption. Some seniors think they stop paying these taxes once they retire. They do not. So now let me give you the 3 exact steps you need to take today to protect yourself. Step 1. Find out exactly when you reach your full retirement age. Go to the official Social Security website, which is SSA.gov, and use their full retirement age calculator. Once you know your full retirement age, you will know which earnings limit applies to you in 2026. The lower limit of $24,480 or the higher limit of $65,160. Write that number down. Tape it to your refrigerator. Know it by heart. Step 2. Call the Social Security Administration anytime your expected earnings change. The number is 1-800-772-1213. If you take a new job, if you get a raise, if you pick up part-time consulting work, if you sell your small business, call them. Update your estimate. This single phone call can prevent thousands of dollars in withheld benefits and overpayment letters. Do not try to do this online. It is not available online. You must call or visit your local office in person. Step 3. Keep careful records of every paycheck, every consulting invoice, every self-employment payment you receive in 2026. Save your pay stubs, save your bank deposit slips, save copies of your tax returns. If the Social Security Administration ever questions your earnings, you need proof. Without proof, you have no defense. With proof, you have full legal protection. Now, before I let you go, I want to ask you something serious. How did you hear about this rule today? Probably by accident. Maybe YouTube recommended this video. Maybe a friend sent it to you. But here is the truth. YouTube does not show you every important video. The notification bell does not always work. And the rules around Social Security, Medicare, pensions, banking, and travel for seniors are changing every single month. You cannot afford to miss the next update. That is why I want you to do one more thing for me right now. Look in the description box below this video. You will see a link to the Global Senior Alerts official WhatsApp channel. When you click that link and join, 2 things happen. First, you will be able to download a free copy of our Senior Benefits Protection Guide. This guide includes the exact 2026 earnings limits, a checklist for reporting your earnings to the Social Security Administration, the phone numbers you need, and a worksheet to help you calculate whether you are at risk of having your benefits withheld. Second, you will get real-time alerts whenever a new rule changes that affects your Social Security, your Medicare, your pension, your bank accounts, your insurance, or your airport travel. No waiting, no guessing. Just clear, accurate information delivered straight to your phone. You worked your whole life to earn these benefits. Do not lose them because of a rule you never heard about. Click the link, join the channel, download the free guide, and let me help you protect what you have earned. I am June. Thank you for spending this time with me today. Take care of yourself, take care of your family, and I will see you in the next video.